If the stock market crashes, not corrects, but crashes, and I'll call that an event, all the stocks sell off, right? So rich people all of a sudden feel poor. And there's usually a couple of head fakes in there, like the market goes down 20%, then it comes back 5%, then it goes down another 10%, then it comes back 2%. You have this like whole situation where people are not accepting it. Some people are buying into it. But anyway, then there's a flight to quality. And what happens is venture capitalists realize if they make a capital call to their limited partners, if those limited partners are getting crushed in the stock market, they may not have the money to make that capital call. Or it might be considered in poor taste to ask your LPs, your limited partners as a venture firm, to give you the money. They might say, you know what, no capital calls for 6 months or a year. Give us a break here. And that's what happened during the Great Recession. If that happens, then the VCs are left to look at their portfolio and say, what's the top third? We're going to focus on them. What's the bottom third? We're going to cut bait with them. If they want to buy their shares back, but we're going to get off the boards, we're going to stop working on them. And the ones in the middle, we'll do the best we can to be supportive and, but we're probably not going to put more money into them. A flight to quality. So you have to ask yourself as a startup founder, are you in the top third, the middle third, or the bottom third of your investors' portfolio? If you're not in the top third or top 10 or 20%, you are not going to be able to raise funding, which means you have to get profitable on the money you have. And in a lot of cases, that's not possible. So you should be looking at this right now and understand that seed rounds and continued financing is going to go down. And additionally, if you are able to raise money, the investors will say to you, great, we want to do a down round. Great, we'll put another $2 million in. We'll put that $2 million on. We want a 3x liquidation preference. So we want $6 million back when we sell. And then if that 2%, that $2 million bought 20%, we're going to want that 20% as well. And all of a sudden, a sale for 15 or 20 million that looks really good, all of a sudden looks really bad with the investors getting half the money. It's called a liquidation preference. You can look it up. We haven't had one in Silicon Valley in a decade. And what you need to do and then it takes probably 3 to 6 months for a crash type situation to start to work itself out. Sometimes it takes 9 or 12. But the seed market, the rich people investing in small companies, seed funds investing in small company, venture capitalists, that tends to be 12, 18, 24 months after the crash. So let me say that again. The stock market may start to recover in 6 to 12 months, but the market for private companies will lag that, and it will be maybe 9 to 24 months before people start feeling more confident to taking on these high-risk assets. You can tell we're in a bit of a bubble right now, or people are chasing returns when they invest in things like Bitcoin that has no fundamental value, nobody's controlling it, and it's complete greed, and they're buying ICOs from idiots who have never run a company before, who can barely write a white paper without spelling errors. So we are in a peak greed period. And when you lose all your money as a rich person, a high net worth individual, all of a sudden you're like, oh my God, I have to stop the bleeding. I got to get rid of my second house. I got to get rid of this NetJets card. I got to figure out a way to balance my budget. And instead of going to Europe for a month, I'm going to go to San Diego. And then the people go to San Diego say, I'm going to stay home, right? Or I'm going to go to Jersey. So it all trickles down, and then everybody gets their balance sheets in order, and then they can start building up. Your company will go out of business in that amount of time. So here's what you should do. You should raise money from good or great investors if you can at okay to great prices, and have 18 to 36 months of capital in your bank account. So if you're burning, let's say $50,000 a month, if you were to raise 1.5 million, that would last you for 30 months. If you last 30 months, you're going to make it way through that 9 to 24 month period I told you about. Well, you know what's going to happen when you deploy that capital? You're going to be able to hire people who've been laid off by these other terrible companies that never made it. They're not going to have the same salary expectations. They may take a salary pay cut. A lot of people after the dot-com bust couldn't get work. Developers in Silicon Valley could not get work. You couldn't rent apartments. If you were a landlord, you couldn't find anybody to rent your apartment. Rents went down. Office space hit the rock bottom. People were begging people to rent space. This does happen. And so and if you think about deploying marketing dollars, right now it's massively competitive to buy Facebook clicks, to buy Twitter clicks, et cetera, or Google clicks. That's all going to go down to half price. Well, if you can hire your employees for a third less, you can spend half as much on marketing. Wow. Can you imagine what that would be like right now? Imagine if you're in a business right now where you're spending $10,000 a day on advertising. Imagine if it got you $15,000, how that would change your economics. What if hiring that next account executive, because there were hundreds of them on the streets of New York and Arizona looking for work because people got laid off, you might be able to get them for 20% less. That means every fifth one is for free, right? You hire 4, get 1 free. This would make you much more efficient. Now, is this going to happen? Nobody knows. I'm not sitting here like Nostradamus telling you this is going to happen. Nobody can know. But what you can know is when things are frothy and peaking, feels like we're at a peak, I don't think we're going to crash. I think we're going to go sideways. I think it's 20% chance of a crash, 100% chance of continued corrections as things get overheated. Could be 10 years of sideways, moderately up, moderately down. That's probably the likely scenario when I talk to folks. But you should be prepared. That's my message to founders. And you should also be looking and saying, why am I not in the top third of my investors' portfolio? The reason is probably you're not printing money. You haven't figured out a repeatable model. So anytime you see something like Facebook losing one of the leading companies in our space, one of the members of FANG, Facebook, Amazon, Netflix, Google, that really sought after cohort. If one of the FANGs loses 20% in a day and $100 billion gets wiped out, you need to take stock. And that's all I'm asking you to do. If you want to read the piece I wrote, it's called "This is Your Captain Speaking. I'm turning on the fasten seatbelt sign," just in case there are bumps. And you can see that piece at calacanis.com. Hey, everybody. I want to tell you a little bit about LinkedIn's advertising program. Yes, you can go on LinkedIn and find high-quality leads, get website traffic, and build your brand awareness. The first step is talking to the right audience, and the right audience is on LinkedIn. Over 500 million professionals engage with content on LinkedIn every day, and your future customers are among them. LinkedIn has marketing tools built in that let you target your customers with precision down to their job title. So if you wanted the VP of sales or the VP of marketing or the CTO or the data scientist, you can look for those specific titles and you can market to them and within specific industries and obviously geographic locations. This lets you create a better message that your customers care about. Maybe your product is bought by people in HR, but sometimes the CEO or COO make the decision. So you could advertise a different message to those 3 different constituents all on LinkedIn. In fact, 4 out of 5 customers on LinkedIn are decision makers at their company. You know this because you're a decision maker and you're on LinkedIn. So you're building relationships that really matter. And here is your call to action. You can redeem a $100 LinkedIn ad credit and launch your first campaign right now. LinkedIn.com/thisweekinstartups. That URL again, LinkedIn.com/thisweekinstartups for your $100 free ad credit. Terms and conditions apply. But it's well worth typing in all those characters. LinkedIn.com/thisweekinstartups.